Pablo, good to see you. How you doing, Pablo? How you been? First one as always. Let's go. How have you been? Good evening, Miles and CMF. Bullock Soppy, good to see you as well. How you doing, brother? How you been? Those things. Just trying to pin the live. Pin to profile. Pin. There we go. Hello, Miles and CMF family. Scott, good to see you as well. How you doing, brother? Hi, CMF. Ripple, good to see you as well. How you doing? Good evening, Miles and CMF. Free and Fairby, good to see you as well. How you doing? What up, Miles? Kerry, good to see you as well, brother. How you doing? How's things? Let's go, Scott. Hi, Miles. This bull run. Johnny, good to see you as well, brother. How you doing? Okay, while everyone tunes in one by one, let's go through the intro, let's go through the disclaimer and what we're going to be talking about tonight's live. Because tonight's going to be a very informative live, a few things that we have to go through so everyone has a better understanding of what's going to be happening in the following days and weeks and months. Hello, Miles of CMF, good to see you as well, Mickey. How you doing? Hello, Miles of CMF, Comatose, good to see you as well. How you doing? Good evening, Miles of CMF family. Owen, good to see you as well. How you doing? Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much everything you need to know regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you have any questions, put it down in the comment section. More than happy to help you out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So if you're tuning in for the first time ever, welcome to the CMF Live. If you're regular, let's go CMF. I want to take a second just to say thank you so much to everybody from the CMF who has already straight away liked and retweeted this live and also put a comment outside the live. And thanks so much to everyone on YouTube who's watching right now who's also liked the live as well and put a comment outside the live. Honestly, I appreciate so much when every single one of you tunes in, not only tunes in, but also smashes the like button, smashes the retweet button, and puts a comment outside the live. Now, on tonight's live, we're going to be talking about essentially a lot of things to go through on tonight's live. Mixture of news to go through, some world news to go through regarding to cryptocurrencies, the market space, some prediction, essentially news to go through regarding CT, essentially Citibank, some Fed news to go through on tonight's essentially live show, some SEC news to go through on tonight's live show, and some Ripple news, obviously, to go through on tonight's live show. Now, before we go through the first news, which is regarding the Fed, and we're also going to be talking about this whole government shutdown situation because we have a slight update on the matter as well. We're going to talk about that a little bit later on tonight's live, but the first news we're going to cover on tonight's live is regarding the Fed. Before we talk about that, let's go to the comment section first, and then we go straight into the first news. So let's see where we were at inside the comment section first, and then we go straight into the first news. Let's see where we're at. Hello, Miles. Good news. Good news for us tonight. Good to see you. How you doing? I would say yes, it's informative. Some of the news that we're going to go from tonight's live is very informative. Everybody should know about it. And obviously ending, as always, as we do with the good news. Good evening, everybody. Good to see you. JP, how you doing, brother? Did you get wasted last night? No, I didn't. Hi, Miles, the CMF group. How you doing today, boss? Let's go, Carlos. Good to see you as well. Good evening, Miles, the CMF. Funky brother. Good to see you as well. How you doing? Good evening, Miles, the CMF. It's good to be back. Let's go, SB. Scott, let's go. Finally, we are moving. Let's go, Funky brother. Good day, Miles and CMF. Mike, good to see you as well, brother. How you doing? Welcome to the stream. Like and subscribe. Thank you so much, Knight, for saying that. Hello, Miles and CMF family. Orphan, good to see you as well. How you doing? Good evening, Miles. How are you? I'm doing great. Callie, good to see you as well. How you doing? Evening, Miles of CMF. Jason, good to see you as well. How you doing? Morning, Miles of CMF. Shelly, good to see you as well. How you doing? Okay. Let's go for the first news on tonight's live, which is regarding the Fed. So Fed Logan essentially warns that tariffs could lift inflation and signals caution ahead of the October meeting that's coming up. And we're also supposed to get some data news coming out. We're supposed to get some data news coming out today and a little bit more essentially in October as well. But it all depends on how long this government shutdown situation is going to be, affecting us. The Federal Reserve officials are voicing caution over essentially further rate cuts as inflation remains above target. Dallas Fed President, essentially Lori Logan, warned that Trump's tariffs could push inflation higher, while essentially other officials remain divided on how restrictive policies should be in terms of the labor market, showing mixed signals. Dallas Fed President, essentially Lori Logan, she said that would approach additional rate cuts, essentially stressing that inflation remains above the 2% target. She added that Trump's tariffs could drive prices higher in the coming months, raising concerns about faster inflation. Now, we have had essentially analytics before come out, and some economists also came out as well and said that Trump's tariffs really don't affect what the Fed's trying to achieve here. Logan, because they said essentially tariffs are very short-term play, not really long-term play that the Fed's trying to rely their data on. Logan said that the labor market still looks fairly balanced, even though essentially risks remain. She argued that the current monetary policy is only modestly restrictive, but necessary to maintain a downward pressure on prices. Logan also suggested that her forecast points to a slower normalization path, signaling a cautious ahead of the October 28th and 29th, essentially FOMC meeting. Now, Cleveland Fed President also Beth Hammack has also supported a restrictive policy stance. The Federal Reserve Chair Jerome Powell made a similar comment last week, though he noted that the effect of the tariffs may be temporary. Despite cautious remarks from some essentially officials, markets are almost fully pricing in a rate cut this month. The probability of a 25 basis point cut in October stands at 97% right now, according to future data. The weaker essentially September ADP jobs reported fueled expectations, showing essentially job growth came in lower than estimates. However, Chicago Fed President, essentially Austin, said that the labor markets remain stable and the broader economy continues to grow pretty solidly, essentially in his words. Not all officials share his confidence. The Fed governor, essentially Michelle Bowman, and the Fed governor, essentially Stephen Mirren, have also voiced their stronger support for easing. Mirren essentially has gone further, calling for a series of 50 basis point rate cuts to be stabilizing the essentially economy before the year end. The debate essentially underscores the divide within the Fed as officials balance rising inflation, essentially raising inflation risk against signs essentially of cooling inside the labor markets. So there's a time period in the Fed that nobody wanted to do rate cuts. Now the Fed is divided. Some inside the Fed want to do 25 basis point rate cuts. Some inside the Fed right now want to do 50 basis rate cuts. They went from no rate cuts to now both sides of the Fed are divided. One wants 12, one wants essentially, one wants 25, and one wants 50 basis point rate cuts. Either way, those rate cuts will have impact on the market space. The bigger the rate cut, the bigger the impact on the market space. If it is priced in, then the market's priced in. Now, real world assets is what we're going to talk about essentially on tonight's slide next. Real world assets growth predicted by Stellar and Moody's. Moody's is essentially what Wall Street relies on. It is gospel for Wall Street in terms of the data that essentially they release inside the market space. Moody's was also the same rating agency that said in 2008 everything is pretty damn essentially excellent, and then we had the massive 2008 crash. It was mostly because Moody's said that if they didn't give the ratings essentially Wall Street wanted, then Wall Street would have just went down the road to another rating agency and got what they wanted. So they had, in other words, essentially fabricated ratings on purpose, but nothing really happened to Moody's at that time. Nothing still happened to Moody's, to be fairly honest. But anyways, Stellar, essentially Centrifuge, and Moody's have all announced projections for real-world asset tokenization sectors to reach trillions by 2030, with a focus on institutional adoption and regulatory harmonization. If Moody's is backing essentially this rating that essentially they're giving out, that the real world asset market space is going to be $1 trillion market space, even though Moody's has some, the 2008 situation, Wall Street still sees Moody's as gospel. The whole world does, to pretty much essentially be fairly honest in terms of the financial sector. So the projected growth signifies a pivotal transition for asset markets, essentially potential traditional finance integrations and significant implications for cryptocurrencies. Stellar, Centrifuge, and Moody's have essentially revealed ambitious projections for the tokenized real-world asset sector. By 2030, the growth is anticipated to be trillions, with emphasis on institutional adoption and overcoming institutional hurdles. David, essentially the managing director at Moody's Ratings, has stated in his own words, tokenization is fundamentally reshaping how institutional investors think about fixed income exposure, but regulatory essential harmonization is the missing piece. Key figures include Moody's executives and leaders from Centrifuge, essentially underline the importance of regulatory clarity. Actions taken essentially reflect a drive to integrate traditional finance and decentralized protocols aiming to scale asset tokenization. The implementation is essentially affect various sectors as they adopt to this essentially evolving landscape. Financial sectors could see increased liquidity, while certain markets may need to adjust to new regulatory frameworks. Potential essentially financial shifts include enhanced liquidity for investors and improved capital for market access. All of that is brilliant for the crypto space. When you hear the words enhanced liquidity with the words crypto market space, is everything you want to hear, to be fairly honest. Regulatory challenges remain significant, essentially, as the government and businesses navigate a complex, essentially, a compliance complexities. Now, projected outcomes include reshaped investment landscapes as real-world assets becomes absolutely mainstream right now in Wall Street. Successful integrations depends on legal frameworks evolving to accommodate these essentially types of innovations, and technological essentially advancements. And the technological advancements in stablecoin integration and compliant tokenization will likely be the driving factor for the future, essentially for the financial structures. Now, historical trends do support the potential for increased TVL in DeFi, especially as new assets essentially enter the market space, which is important to trade essentially on. Essentially, it's important to be inside the real world asset market space, since essentially Wall Street and the entire institutional sector is very big on the idea of real world assets. So it is a market space you want to be inside of, inside the crypto space as well. Now, obviously, the biggest category when you hear the words real world assets, the number one essentially you would pretty much hear about is Ondo Finance, which is also a project that I mentioned day one. It essentially was released, but Ondo Finance, XRP, essentially, Solana has some playway in there as well. BNB has a play essentially in real world assets. Solana, XRP, Solana, BNB, Ethereum, and a few other ones have a play essentially real world assets. But if you want to know more about real world assets, definitely check out rwa.xyz, and you can also see who has the most amount of fundings coming in, who has the most amount of fundings coming in the last 30 days as well. If I'm not mistaken, XRP is ranking number one if you look at the charts in terms of the last 30 days. Now, Rothschilds is who we're going to talk about next on tonight's live. Before we talk about the Rothschilds, let's go to the comment section first. Let's see what's happening there, and then we'll go straight into the next news on tonight's live. So let's see where we were at. We were at here. Share the live, hit the like button. Let's go, Scott. Thank you for that, brother. Hi, Miles. Hope you're well, mate. Listening to you all the way from Tenerife, and it's hot. Let's go, Addy. Good evening, Miles and family. Susie, good to see you. How you doing? Hi, Miles and CMF. Peg, good to see you. How you doing? Share the live. Let's go, Scott. Miles, what are your thoughts on HBAR? Great. ACH, great. I heard that I have heard and read very little about both until I essentially recently about HBAR. You don't hear much regarding ACH, but it's still essentially, regarding off-ramps and on-ramps. ACH does do tremendous work in that category, and HBAR has that potential. I mean, it has that ETF going forward as well once it gets approved. CMF is great how we communicate and support one another outside and within the CMF. The outside world has to be celebrating. Let's keep it up. Let's go, Scott. Evening, mate. Pure, good to see you. How you doing? What's the temp? Scott. Now, Rothschilds is who we're going to talk about next on tonight's live. Evening, Miles. Paul, good to see you. How you doing? Perfect time. We're about to go for the next news on tonight's live. So, whenever you hear the words Rothschilds, everybody assumes conspiracy theories or people that are running the show. Well, this time around, Rothschilds essentially is backing Coinbase. If the Rothschilds are backing Coinbase, then if you ever needed a sign, a signal that the crypto world is kickstarting or it's here to stay, some sort of confirmation. Now, people would say BlackRock would be your confirmation, or essentially, Franklin Templeton would be your essential, or Goldman Sachs, or BNY Mellon, or these types of institutions. But Rothschilds essentially is raising Coinbase's target to $417, citing institutional demand. Rothschilds & Co. recently raised its target price for Coinbase to $417, citing essentially increased institutional demand and cryptocurrency adoption. Within traditional finance, essentially sectors, the upgrade highlights anticipated growth for regulated exchanges, driving optimism in Coinbase's market position and underscoring potential profitability aimed evolving financial integration trends. Rothschilds & Co. essentially has increased Coinbase's target price to 417, citing that institutional adoption as the main catalyst. This decision reflects their growing confidence in regulated crypto exchanges benefiting from traditional finance expanding into tokenization. Now, the move was driven by increased institutional demand, benefiting from Coinbase's role as that regulated exchange as they are, and the backings that they do have. I mean, they work with one of the biggest names inside the financial sector, one of them being essentially BlackRock. Coinbase's shares are essentially presently trading near $374, indicating a potential market growth gains. Following essentially the revised price target, institutional demand for regulated crypto venues is expected to enhance these developments. And according to Rothschilds Co.'s essentially research division, the upgrade was primarily due to its optimistic outlook on the accelerating application and adoption of cryptocurrencies in traditional finance. The Rothschilds are essentially raising the price target for Coinbase. What they're essentially suggesting is and also suggesting that, crypto is a regulated market space now and so on and so on. They're pretty much given the green light. I mean, they do have quite a lot of financing and influence around the entire world. Analysts believe that with that, essentially the increasing institutional demand and the development of the trends such as tokenization, Coinbase as a regulated industry leader will be a major beneficiary. This upgrade is attributed to the accelerating adoption of cryptocurrencies and their role in traditional finance. Increasing institutional involvement is seen as a key driver of Coinbase's future performance. And previous instances of institutional adoption cycles have led to elevated stock prices for exchanges like Coinbase. This reflects the wider, essentially spread positive sentiments among investors regarding such integrations. So it seems like the Rothschilds family has given a green light to the crypto market space. If they're coming out doing a research paper on Coinbase and suggesting that the markets now, the crypto markets are regulated and tokenization is a big deal, I'll tell you what's more than a big deal than tokenization is the Rothschilds family coming out essentially giving a green light to cryptocurrencies and saying that the market space is mature now for everybody to enter in terms of institutions. That is massive. Now, Samsung is what we're going to talk about next, also related to Coinbase. If you have seen it, if you haven't seen it, here's essentially what's happened. Samsung expands crypto partnership with Coinbase for Galaxy users. Now, Samsung also does offer a crypto wallet. For the longest time, they've been offering this, and it's only available to Samsung users. If you didn't know about it, now you know. Samsung has solidified its commitment to cryptocurrency space by expanding its partnership with Coinbase. Galaxy users who link their accounts through Samsung Wallet will now enjoy 3 months of free access to Coinbase One, the exchange's premium subscription service. This service offers exclusive benefits such as zero trading fees on a range of assets, enhanced staking rewards, priority customer support, and access to special essentially partner offers. Additionally, Galaxy users will receive a $25 bonus essentially after completing their first trade via Coinbase to essentially the Samsung Wallet. The integration goes beyond just trading perks, as Samsung has deepened its crypto efforts by enabling users to view essentially crypto alongside other digital essentials through Samsung's ecosystem. This move by Samsung is a part of its ongoing efforts to integrate cryptocurrencies into its mobile ecosystems as much as it can. Earlier this year, the company announced essentially integrations of Coinbase essentially and Samsung Pay. This builds essentially on its earlier ventures into essentially crypto dating back to 2019 when it first introduced the Samsung blockchain wallet with the Galaxy S10s. The company followed this essentially with a partnership with cryptocurrency exchanges Gemini after that, integrating its services into the wallet. The tech giant has not limited itself to just trading partners. In 2022, it also collaborated with Vintry, a platform built on Cardano's blockchain to push essentially environmental sustainability when it comes to blockchain. Samsung has further invested into blockchain-related companies, including essentially NFT ledger Yoga Labs, through its innovation arm, Samsung Next. This move also essentially illustrates Samsung's ongoing strategy to embed crypto and blockchain technology into its products and services by providing users with tools to access, trade, and integrate digital assets into their daily life. And Samsung is positioning itself as a leader in the tech world when it comes to crypto adoption. I mean, this is massive for people that do have Samsung, essentially Samsung crypto wallets. That does raise the question of, Are we ever going to see an Apple crypto wallet? And if Apple did create a crypto wallet, the same way Samsung has created a blockchain wallet, will people start using the Apple crypto wallet? Will people start trusting the Apple crypto wallet more than alternatives? Let's see if Apple will ever create essentially a wallet. But for everyone who is a Samsung user, you can now get 3 months free access to Coinbase One, $25 essentially off your first trades, and so many other features and perks are coming towards you as a Samsung user from Coinbase. Now, moving on from that news to the United Kingdom. The UK has been making some announcements. So far, nothing's put into stone, but they have been making certain announcements. And essentially on Wednesday's live show, I read out you the news that essentially Andrew Bailey, who is actually who leads the Bank of England, who's the head of the Bank of England, has come out essentially and said that he's more in favor of now stable coins than he does care about the commercial banks, which is the opposite of what he was thinking before. He cared more about the commercial banks than the crypto market space, but now he cares more about stable coins and cryptocurrencies than he cares for the commercial banks. So things are changing in the UK. The perspective of cryptocurrencies is changing, not just for the retail section, but also for the institutional sector and the central bank. And we have had essentially an update from the UK, another update from the UK, which is companies weigh in as the essentially UK prepares to reverse its crypto ETN ban. So the UK's Financial Conduct Authority, the FCA, is set to soon reverse essentially a ban on crypto exchange traded notes, ETNs, for retail investors that was essentially put into place back in 2019. According to an August 1st essentially notice, the UK's watchdog will lift a ban on terms of the retail access to crypto ETNs, starting essentially on Wednesday, provided that they are traded on the FCA-approved UK-based essentially investment exchange. Unlike essentially ETFs, which are still banned in the UK for retail investors, ETNs essentially represented debt securities tied to crypto and not backed by the underlying asset. With the lifting of the ban looming, companies with essentially operations in the UK have been weighing in on what the regulatory essentially change could mean for the retail investors. BlackRock, the world's largest asset manager company, is reportedly looking into ways to offer its iShares Bitcoin ETF essentially in terms of an ETN in the UK. Since the UK is about to be opening its doors to cryptocurrencies very slowly, even BlackRock is looking into how can they launch in the UK when it comes to cryptocurrency, or in this case, their Bitcoin essentially ETF. They can't launch it as an ETF because the door's so closed on ETFs, but the door is open on ETNs. So we've also had other perspectives coming in. Bitwise's CEO Hunter Horsley, whose company essentially European operations are headquartered in London, said on X that he was excited to be able to serve more investors in our home market in Europe at essentially finding, in other words, in his words. Until now, the UK has been an outlier, essentially an outlier on the ETNs. Ian, essentially the board advisor of Digital Assets Trade Association Crypto UK, told Cointelegraph, "We hope this move will improve consumer protections, and we will continue to make the case for lifting the ban on retail investors from accessing highly regulated derivative products." According to an August notice, essentially from the FCA, any asset manager planning to offer trading of ETNs to the UK retail investors had to have them listed on a recognized investment exchange. The decision essentially followed consultations with companies, trade associations, and consumer groups. Companies essentially with operations in the UK like CoinShare and essentially Bitwise will be able to offer essentially ETN products with exposure to digital assets. However, the Financial Times reported that the retail investors could have to wait up to a week before being able to trade, in part due to the FCA only being essentially to accept the crypto prospects on September 23rd, 2 weeks before lifting the ban. The regulator will likely have to essentially review the offerings from companies and follow up from any potential comments or concerns. As of today, the FCA had made no move suggesting that it was planning to lift a similar ban on ETFs or crypto derivatives for retail investors. It's a start. They're starting with ETNs, moving up to essentially ETFs and derivatives and so on. While several respondents essentially called for retail access to crypto ETFs and ETFs marketed to UK retail investors are unable to essentially invest direct into crypto assets under our current regulatory framework for funds, said the FCA in its August notice lifting the ETN ban. This framework would need to be updated before retail investors could access the cyber assets and ETFs. In contrast, Spot cryptocurrencies tied to ETFs have been available for trading in the US since essentially being approved by the Securities Exchange Commission in January 2024. The agency is currently operating with restrictions, essentially after the US lawmakers failed to pass the bill, fund the government beyond October 1st, limiting its ability to review any of the ETFs, which we're going to talk about a little bit later on these ETFs as well, in terms of how far they're going to be passed and so on, how long it's going to take for the crypto ETFs, since we do have a essentially government ban. We're going to talk a little bit later on that as well on tonight's slide. But regarding the UK, we're finally getting somewhere, because the UK first went from not interested in cryptocurrencies, then all of a sudden interested after the Trump meeting that they had in the UK. And then they just started talking about the crypto markets. We're going to do this and we're going to do that. But nothing was really passing. It was just words until now. We got our first passing, you could pretty much say, once it gets on paper, but it does seem like it's going to be our first entry. It's going to be crypto ETNs, then ETFs is going to be discussed, and the laws are going to be changed, and derivatives. All of that is going to add quite a lot of liquidity towards the market space, not overnight, but over time. Now, moving on from the UK and onto Russia. So, as I've said multiple times, the number one downfall of SWIFT is it's political. It's not because it's slow or expensive, it's political. And that is why companies have moved off SWIFT. Essentially, countries have moved off SWIFT. And that's why I said SWIFT could partner up with whoever it wants. Nobody really wants to work with SWIFT because they don't trust it in case their country gets sanctioned, because it's a political tool, not really a messaging standard. Even though it claims to be a messaging standard, it's more of a political tool. So here's an example. Ruble, backed crypto sanctioned in US, finds a spotlight in Asia. A company that was sanctioned by the US, who is a Russian essentially backed company, was sanctioned by the US, and it's a crypto firm, essentially, appeared in essentially one of these crypto events as one of the sponsors of the events and so on, inside essentially one of these, the Singapore event that was happening for cryptocurrencies, one of the biggest events, to be fairly honest, in Asia. A Russian-linked stablecoin under US sanctions surfaced at one of Asia's crypto events this week, one of the biggest events this week, showing how fragmented, essentially global rules are leaving space for sanctioned players to thrive. Kazakh's essentially based A785, a ruble-backed token created in January by a Russian defense leader and payments firm, was listed as a platinum sponsor at the Token 2049 event that happened in Singapore. The token's booth drew attention essentially on the conference floor, and as regulatory affairs director, essentially Olga, even essentially spoke on the stage before references to the company were quietly scrambled from the event's website on Thursday. The US and the UK sanctioned firms behind A785 in August, describing the project as a part of the network designed to help Russians sidestep restrictions imposed after the invasion of Ukraine. Regarding this whole Russia-Ukraine situation, because Russia is sanctioned, Russia has leaned more towards digital assets than ever before. But neither Singapore nor Hong Kong has imposed similar measures. So even though the UK and the US have sanctioned Russia, essentially, regarding this whole scenario, or sanctioned even Russian-linked companies that are related to cryptocurrencies, Singapore and Hong Kong couldn't care less by the looks of it. So neither one of these essentially have imposed similar measures, giving the token room to operate in Asia. Not only that, but giving it a platinum sponsorship at the event. We were sanctioned several times, said the leader of this essentially project, and told the reporters at the event, we have nothing to do with money laundering and are compliant with the Kazakh essentially regulations. Despite Western pressure, activity in the token is booming. The data essentially from blockchain analytics, essentially from Epilot, shows that A785 has processed more than $70 billion. So if you thought this was maybe some, small Russian operation company inside the crypto space, they've moved so far $70 billion in crypto payments. In transfers since their launch, up from $40 billion just 2 months ago. Daily transactions have doubled in the past month, reflecting growing demand among Russians, among the Russians being shut out from traditional financial channels, which is SWIFT. The event highlights the limits of Western sanctions enforcements. US lawmakers note that Washington has no jurisdiction if no US persons are involved, leaving Asian financial hubs as a gray zone. where US blacklisted crypto projects can still continue to do business as usual. In other words, the US cannot interfere into this one because there's no US involvement, there's no US personnel, so they really can't get involved in this, especially in terms of a legal matter. With Russia cut off from the global payment systems like SWIFT, tokens like A785 offer a parallel network for trade and remittances. Its presence at token 2049 sends a clear message. Even under sanctions, demand, this is very important, even under sanctions, demand for alternative rails is strong. Demand for alternative rails, payment rails, is strong, even though they're sanctioned by essentially SWIFT, even though the entire country of Russia is sanctioned by SWIFT. And they're not the only ones. This is why countries are moving away from SWIFT. As much as SWIFT wants to come on X and say, we are still the biggest and most trusted worldwide payment system in the world, countries are shifting away from SWIFT because they're scared one day they will also too get sanctioned by SWIFT. So this is their opportunity to seize. The reason why countries are moving is because they never could before. Every country was stuck because of SWIFT. But now, because of cryptocurrencies and blockchain technology, countries aren't restricted to only be using Swift's payment system anymore. They can completely move from Swift's payment system and go into the world of blockchain or DeFi technology and so on, DeFi payments and financial sector and so on. So they don't have to use Swift anymore. So as long as, as much as Swift is going on X and saying we're the most trusted and messaging standard payment sector of the world, everybody uses us, everybody trusts us, they clearly don't. They clearly don't. Even the US knows that they can't interfere in terms of the Asian market space when it comes to payments. And that is why BRICS was created day one. BRICS wasn't mainly created to get away from the US dollars. They were mainly created to get away from SWIFT because of how much essentially political party movements happen inside of SWIFT when they sanction countries. And that is why I've always said since day one, it's a political tool, not really a messaging standard, as they claim to do so. Now, on paper, they're a messaging standard. In reality, they're a political tool. Goldman Sachs is what we're going to talk about on tonight's live next. Goldman Sachs predicts significant upside for gold by 2026. Before we talk about that, let's go inside the comment section first. As I said previously, this is live, just like always. If you do have any questions or comments, go for it inside the comment section. More than happy to help you out. So let's see where we were at inside the comment section. We were at here. Heavy day today. Sold my home and had to pay my ex-wife off. Lol. Definitely a heavy day. Good luck on that one, Paul. Is this Samsung offer is just for the USA users? I think it's worldwide Samsung users, to be fairly honest. I think you'll see the offer inside the Samsung wallet on the app. If you don't have the app, you can probably download it from the Google Play Store or the Samsung Play Store. Good evening, Miles and CMF. Manny, good to see you. How you did, although not financial advice whatsoever going on Samsung Coinbase thing. But if you want, I could send you the link from Coinbase website. Probably got on Samsung's thing. Good evening, Miles and family. Ian, good to see you. How you doing? Hi, Miles and family. Alex, good to see you. How you doing? Happy Pisces has put. I saw a video with Swift executives saying some clients will demand the immediate transfer of funds on certain block changes, but there might be essentially clients that don't mind and don't need to have their money right away, so they can use the standard Swift process. Sure, wait 7 days and pay $2,000 to send 100,000. Sure, buddy, that makes sense. It's a fair point, Happy Pisces. It's a fair point. Now, Goldman Sachs predicts significant upside for gold by 2026. If you're big in gold, this is great for you. And also Bitcoin sometimes follows gold, sometimes follows tech stocks, and sometimes just it's staggered, doesn't really move. Goldman Sachs analyst, led by Dan, essentially anticipates a significant price rise for gold, projecting up to $4,300 per ounce by the end of 2026, driven by increased investment flows. This projected essentially surge highlights the potential shifts in asset allocations in market uncertainty, influencing investor strategies, but currently essentially leaving digital assets unaffected. Goldman Sachs, essentially analysts led by Dan, forecast a major surge in that gold price movements, and the forecast highlights significant investment demand, adding that to gold's status as that key asset for investors despite the current market uncertainties. Goldman Sachs analysts have identified a larger upside risk for gold. The metal has already surged 47% year to date, driven by strong investment demands and macroeconomic factors in play. The forecast sees that price climbing above essentially the 4,200 range, 4,300 range, 4,400 range, essentially by mid-2026. Analysts point to significant inflows from private investors, essentially, and central banks as key drivers of this potential growth. Samantha, essentially Dot, the commodities analyst at Goldman Sachs, stated, should private investors diversify more heavily into gold, we see potential upside to gold prices to well above the 4,000 mid, essentially 2026 baselines. As a result, gold remains our highest conviction long recommendation pretty much to date. Increased investments in gold is impacting the markets by the bullion essentially backed ETFs seeing significant inflows also. Central banks have also resumed purchasing, bolstering confidence in continued price increases. This shift indicates an essentially increasing preference for gold amidst these economic uncertainties. One line I read out there, extremely important for essentially a particular another news that we're going to go through on tonight's slide as well. And that one line is central banks have also resumed purchasing gold. This shift essentially indicates an increasing preference for gold. Past events such as the post-2008 market shift saw similar investors move towards gold. The current situations, larger scale, may be bringing in such a pronounced impacts on prices. Analysts also suggest a strong future for gold, with historical trends supporting predicted growth. If past essentially patterns of gold essentially hold, the market may expect significant price movements happening and forecasted by 2026. Now, moving on essentially from Goldman Sachs' perspective regarding gold, and keep that line in your head regarding central banks still resuming to buy gold. But moving on from that to Trump news. Trump proposes tariff-based bonuses. This one is an interesting one. Before we go through that news, let's go inside the comment section first. Let's see where we're at inside the comment section. Facts, let's go. Scott was good news. Now the divorce is up. Okay, that one's regarding Paul. Okay, Trump proposes tariff-based bonuses aimed economic debate. Some people inside the United States like Trump, some people hate Trump. I would have to say the majority probably likes Trump because he is the president of the United States, which means you have to get the majority to like him to get those votes in. So the majority of the United States likes Trump. The minority hates Trump. Trump is about to be introducing something quite interesting regarding this whole tariff situation, which is giving out a bonus to American citizens. This is going to get interesting because the people that hate Trump, will they accept the bonus that Trump is going to give them from the tariff-based scenarios? Donald Trump proposes direct payments of $1,000 to $2,000 to Americans as tariff bonuses. From all the tariff money the United States has made, Trump wants to give each citizen of America $1,000 to $2,000, between $1,000 to $2,000 of a tariff-based bonus. These would be funded by high tariff revenues following his past pandemic-era stimulus checks and ongoing essentially stance on tariffs. This proposal highlights Trump's ongoing tariff focus and direct payment strategy, raising potential economic and market implications. Trump has publicly proposed issuing Americans $1,000 to $2,000 tariff bonuses funded directly from the whole tariff revenues. A lot of people said Trump's family, Trump himself, even Maxine Waters, Pocahontas have all came out and said Trump has made millions to billions of dollars from tariffs. His family's made so much money. Well, Trump is about to give it back. He's about to give $1,000 to $2,000 per citizen in the United States. And they're calling it tariff bonuses, funded directly from those tariff revenues. Let's see what the Maxine Waters and the Pocahontas of the world is going to be saying about that. They're probably going to spin it somehow that Trump is an evil man giving out free money. The plan comes as tariff collections essentially reaches historical highs, blustering essentially Trump's fiscal ambitions. Trump expressed the idea on October 2nd, essentially on American One News, remarking on potential cash rebates from tariffs. Donald J. Trump, essentially former US president and Republican candidate, stated, "We're thinking maybe $1,000 to $2,000. It would be great." Involved parties include Trump and the US Treasury Secretary, Scott Benson, who is evaluating the essential legalities of this. The proposal underscores Trump's known advocacy for tariffs and direct payments, echoing strategies from his presidency. The US is generating around $214.9 to $300 billion annually from tariffs, yet Trump's ambitious claims exceed $1 trillion yearly revenue. Market analysts speculate a boost in alternative assets. This is where it gets important for the crypto market space. Markets are suggesting that this could help, essentially, the crypto market space. It could help the stock market. It could boost markets when Trump does this. So, essentially, they're saying market analysts are speculating a boost in alternative assets should the proposal materialize. Current trends indicate essentially stimulus-like payments can drive retail investments in cryptocurrencies. However, no on-chain data yet reflects the specific proposal influence because we've never had a tariff bonus happen inside the United States. The Supreme Court's pending review of the legalities on the presidential tariff actions adds another layer to this unfolding scenario. This move could potentially inject liquidity into market sectors if implemented correctly. Past stimulus efforts lead to increase in crypto exchange activities, suggesting potential patterns if Trump's plan proceeds. So if you are an American citizen, right now, they're going through the legalities of giving each American between $1,000 to $2,000 from that tariff bonus that the United States has been making so far. I could guarantee you one thing, pretty much I could bet my life on it, that if the tables were turned and it was Biden who was in control of the United States and Biden did tariffs, no hope in hell you would ever hear the words tariff bonuses for American citizens. I could bet both of my lungs on that. Now, Vietnam is what's going to be essentially what we're going to be talking about next on tonight's night. Moving off the United States to Vietnam. Now, we've talked about Vietnam essentially opening its doors to cryptocurrencies, essentially in some sort of a manner. They've talked about regulations. They've talked about a crypto exchange, a government crypto exchange from Vietnam. But we've got to a stage now. Vietnam is actually about to be opening its doors. And they do bring billions and billions and billions of dollars in terms of liquidity towards the crypto market space. Vietnam's state bank, alongside the government, key government entities, announces regulatory change to support crypto adoption and credit growth, setting frameworks for asset legalities and business operations effective as January 2026. Vietnam is going to be fully opening its country's doors up to cryptocurrencies. This marks essentially a significant policy shift impacting essentially the cryptocurrency market space. In terms of the legal holdings, the rights could increase institutional essentially focus and market stability, enticing potential crypto investments. I want to say potential, definitely, not overnight, but definitely it's going to essentially pull liquidity inside the market space. Vietnam's central bank, the State Bank of Vietnam, SBV, is in collaboration with lawmakers, legally recognized crypto holdings in October 2025, aiming to support rapid essentially adoption and credit growth. This move essentially by Vietnam's government borders the scope of essentially for regulated crypto activities, aligning with global practices and providing a structured environment for market innovations. Vietnam's central bank essentially and lawmakers are shifting towards that regulatory framework for crypto assets by adopting the resolution of 05 in October 2025. This change marks a significant transition from previous bans on cryptocurrencies. The National Assembly and State Bank of Vietnam lead these changes, essentially focusing on establishing a legal environment for crypto holdings. By creating this framework, they aim to boost confidence in Vietnam's financial markets. The adoption of regulatory measures is expected to essentially impact the crypto ownerships, providing that clarity for institutional involvements, and the initiative also aims to gradually allow a publicly traded exchange under strict oversight, however, by 2026. This regulation promotes financial integration and market expansion, setting Vietnam up as a path to a similar to other innovative market spaces around the world. Industries related to crypto are anticipated to gain from this operational transparency. Vietnam has historically maintained a cautious stance on cryptocurrencies, but now they're about to be opening their doors. This is what they have to say. Our role is to provide legal clarity on cryptocurrencies, ensuring that new legislation aligns with the international, essentially, best practices, said the Minister of Justice at Vietnam. Now, experts predict that essentially an increase in market activity, anticipate that structured regulations will attract international, essentially international firms and enhance essentially Vietnam's status as a progressive financial hub for the cryptocurrency sector in Southeast Asia. So Vietnam is about to be opening that door up to cryptocurrency. It is quite big news. I mean, they do provide billions of dollars in cryptocurrencies, to be fairly honest. Now, the SEC is what we're going to talk about next on tonight's live. Before we go for the SEC news, let's go inside the comment section first. Let's see what's happening inside the comment section. Let me go straight into the SEC news. Let's see where we're at. I heard the news today. I opened my Samsung wallet and didn't see any offer. Coinbase website, maybe check it out, see what they say. Will Americans actually see that money? Congress can't agree to open the government. Both parties are responsible. Yes, I agree, Scott. Yep. I mean, this whole scenario of this, shutting down America needs to open up again. We're enjoying the benefits inside the crypto space of the market drying up in terms of liquidity in the traditional sense. And the cryptocurrency market is seen as that liquidity, flow of liquidity inside of it. It's great, but we do need those essentially doors opening up. And I'll tell you why. It's regarding the SEC. So some deadlines were coming up inside the SEC. One of them was essentially Litecoin, and the deadline passed. Nothing happened. No announcements, nothing. So the SEC misses the final essentially deadlines on Canary Litecoin ETF as shutdown freezes approval. Now, a few things happen which everybody needs to be fully aware of. The U.S. Securities Exchange Commission, SEC, has delayed its running on the Canary Litecoin ETF after missing its final October 2nd deadline. The delay is linked to the ongoing federal government shutdown, which essentially has disrupted regulatory activities. Due to the government shutdown, the SEC is limited on what they can do. This development raises uncertainty around other pending altcoin ETFs. Solana, XRP, Dogecoin, Cardano, Hedera. The SEC was expected to decide on Solana's ETFs by October 10th, while XRP and Dogecoin's essentially filings face deadlines next week. This is why the government shutdown situation needs to go away. This is why the Democratic, because I know for a fact, Trump is not going to bend the knee for the Democratic Party. That is never going to happen. It's the Democratic Party, and we only need a few votes to get the doors back opened. Bloomberg's ETFs analyst, James, explained that the SEC is directing issuers to file under a generic essential listing standards, meaning the usual deadlines may no longer apply. So Eric and James from Bloomberg have given their own perspectives on the matter. People are suggesting it's mostly to do with the government shutdown regarding the whole missed deadline, and nothing came out of the SEC regarding the Litecoin situation. Extended, not extended, what's happening? Eric and James are also suggesting it's not just to do with the government shutdown. It's also to do with what the SEC said beforehand, which was withdraw one of your filings and refile under the whole new SEC ETF fast track movement they're doing. So that is why those deadlines maybe don't apply anymore. So, meaning that those deadlines no longer apply, which means this deadline date might not matter at all. Litecoin's price surged 15% in the past week, trading essentially at these price movements, and thought it was going to get some sort of ETF announcements. Nothing happened. Derivatives data essentially from CoinGlass showed a 4% rise in futures open interest in the last 24 hours, climbing essentially near the 25% over this week, and open interest on Binance dropped slightly from rising essentially OKX and Bybit, suggesting cautious positioning among traders. Eric and James added that the S1 filings remain active. So all the S1 filings that was done essentially for all of these ETFs are still remaining active. It's not just all the filings are canceled out, everybody has to reply for everything. The S1 filings stay, but the 19B4 submissions are withdrawn. Fellow analyst, essentially Eric, compared the delay to a rain delay, suggesting approvals may resume when normal operations return. And that is why this whole no news for Litecoin ETF came out, because everybody thought maybe we're going to get an announcement, probably it's going to be extended, but nothing. So I had a look into the whole SEC situation regarding these deadline situations and regarding this whole government shutdown. There is a law that is a gray area law that could be applied. So in times of government shutdown, when the SEC is limited in terms of workers or employees in that sense, they can only pass things that are emergency. If there's an emergency situation and the limited employees that the SEC still has, they can, do the filings and process the thing. So they don't see ETFs as emergency right now, according to essentially what the chatter is going around because of the limited workflow. However, I was trying to look for a workaround. Is there a workaround, or do we have to wait for the US to open its doors back up? So there is a 20-day rule. Because they're all going to be reapplying essentially on that new filing. So technically it's a new filing. And the 19B4 don't count, the S1s are new filings. So here is a theoretical workaround that nobody's talking about inside the crypto space. And it is a gray area, but it is law. Under Section 8A of the Securities Act, a registration statement like the S1 can technically become effective 20 days after filing without staff action. So 20 days after essentially the S1 filings have been processed, after the S1 filings have been done, 20 days, no response from the SEC, that can technically become effective. Provided it does not contain a delaying amendment, which is typically included to allow the SEC time to review. So let's say there's an S1, now that the SEC has said everybody has to refile essentially on this new, fast track scenario on these S1s. So let's say they refile or they continue their S1s, and there is nothing written on their accounts of the SEC is going to delay this. And it goes for a 20-day period. It could be green-lighted without the SEC's response. Now, the gray area part. Historically, this path is rarely used because the SEC staff can and often does ask the company to reinsert the delay amendment once they resume operations, which means, let's say, if somehow we go into a 20-day, 30-day government delay shutdown scenario, then we could essentially, the SEC, when it does become operational again, they could pause that filing. Even though it got a green light, they could say, nope, retract it. The company to reinsert the delaying amendment once they resume operations, or they can issue a stop order or post-effectiveness if they find material issues. It's a high-risk move that most issuers avoid. But it is law, Section 8A, where if they refile on their S1s, and for a 20-day period, nothing comes out of the SEC, then those ETFs will all be green-lighted. Recent rule changes streamline post-shutdown approvals. Some analysts believe that following the approvals of generic listing standards for certain commodities-based trust shares, which includes some crypto ETFs, the final sign-off once the SEC reopens could be much faster. So there is some good news to that sense as well. Let's just putting aside the Section 8 that could be used. Section 8A could be used. Gray area, but it's law and it could be used. Putting that to one side. On the other side of the spectrum is also the perspectives and the chatter that's coming out right now, which is once the SEC comes back to operation state, in other words, the doors open up for the United States, the government opens their doors. The chatter that's going on right now is that the final sign-off, once the SEC reopens their doors, could be much more faster for the funds that already meet the new standards. The process could become almost automatic, is what they're suggesting, focusing mainly on the effectiveness of the S1 filings. So the chatter that's going on right now is the moment the SEC opening its doors, expect fast ETF approvals because they're all under that whole fast-track SEC filing now. And they're saying companies should be using this particular time with the government shutdown scenario to get all of their documentation ready, S1 filed in, SEC doors open, everybody's fast-tracked. In summary, the delay is unavoidable while the shutdown essentially is active. The only way around it for the issuer is to ensure all filings are completed and perfect so they can be processed immediately when the SEC opens its doors, potentially leveraging the automatic effectiveness rule that the SEC just established, the fast-track SEC ETF rule, or benefiting from the recent streamlining of that listing standard. The duration of the shutdown remains the primary factor controlling the launch of this timeline. So, we've had our fun with the whole government shutdown situation. We need those doors open. Otherwise, there's one way companies could go is S1 filings, 20-day, no response from the SEC if we do have a 20-day shutdown, and then automatically pass through. But the SEC has to come up with a reason, obviously, because of Section 8A, which is a genuine act. The SEC has to come up with a reason if they want to retract that filing, even though it passes through automatically. So they can't just say, no, stop everything. There must be a reasoning for it. So they can use Section 8A if they wanted to, or they could get their filings in order under this new fast-track ETF approval. Once the doors open, everybody's rushed through it. Right now, it does really depend on how things are going to be playing out. Are companies just going to go 20-day period pass through, or is the SEC going to open its doors in a few days and all these companies have their filings all in order just to fast track them through? Moving on from that, and this is why I say we've had our fun, regardless of the whole situation, but the doors need to open up now. And it does have to be the Democratic Party. And we only need few votes, just a few votes to get those doors open. And apparently 2 of the people that rejected that scenario, I mean, there's a lot of Democrats that rejected it, but 2 of those people are funded by Iran. 2 of those essentially, 2 of those Democratic people that voted also no, 2 of them are funded by Iran. Now, I mean, you can tell where that one's going. Below is what we're going to, so Brazil is what we're going to talk about next on tonight's live. Moving on from the SEC, talking about Brazil. Below essentially named Brazil's Bitcoin capital aimed crypto boom. Before we talk about Brazil, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments, go for inside the comment section. Let's see where we're at inside the comment section. I heard, oh no, okay, we're here. Good luck to any bank who still wants to use Swift instead of Ripple's blockchain technology. It's like paying for coffee with BTC. Good luck. I agree 100%. The coffee will get cold. Cold? Be ice cubes. Any update on ETF dates? As you previously said, it could be days. Paul, because this scenario. Okay, yes, for sure. And I have clean break too. So up from here. Are latecomers welcome? Yes, latecomers are welcome. The CMF is going to be known as the Crypto Millionaire Family. Let's go, Miles. SEI, no updates whatsoever, no news on that either. Miles, hot, no news on that either. Now, below, capital of the Bitcoin essentially is going to be known for Brazil. The city of Belo essentially has officially been declared today the Bitcoin capital of Brazil. Law 11.905 intact today on October 2nd essentially establishes the essentially as a national hub for cryptocurrency activities, aiming to consolidate the city's role in technology, finance, and education tied to Bitcoin. Proposed by essentially the council, essentially the law seeks to attract investments, entrepreneurship, and promote innovation around crypto assets, while positioning Belo essentially as the center for events, research, and debates on Bitcoin essentially and blockchain technology. Importantly, officials essentially clarified that the measures does not essentially interfere with the federal financial regulations, but emphasizes education and awareness of global financial trends. The goal is to position Belo as a reference point for study, debate, and developments inside the crypto sector. And encouraging essentially local projects can prepare the city for economic transformations ahead. The move comes as Brazil as a whole cements its place long essentially among the world's leading crypto markets. And a recent report by Chain Analysis revealed that crypto transactions inside the country reached 1.7 trillion essentially Brazilian reals to equivalent of $318.8 billion. Between July 2024 and June 2025, an increase of 109% has been happening essentially in Brazil. Bilo's new title reflects not just a symbolic gesture, but a part of the nationwide trend of Bitcoin cities. While Brazil now ranked as essentially the 5th largest crypto market globally, cities like Bilo are aligning with the growing demand for local hubs that combine education, infrastructure, and regulatory readiness. And the surge also heightens regulatory concerns. And Brazil's central bank plans new rules in 2025 with stablecoins at its core. As adoption grows and oversight becomes crucial, the world is still extremely moving towards cryptocurrencies. Now, CME Group announces 24/7 cryptocurrency trading. That is also big news. CME Group has announced it will begin offering 24/7 cryptocurrency futures and options trading in 2026, reflecting rising essentially institutional demand for round-the-clock market access. This expansion indicates growing institutional interest and aims to align CME's offerings with crypto-native essentially trading environments, potentially impacting liquidity and risk management strategies. The CME Group declared it will initiate 24/7 trading for cryptocurrency futures and options of 2026. This can provide a tremendous amount of liquidity. Pending regulatory approvals, this extension aims at essentially accommodating increasing institutional interest and participation in digital asset derivatives. Leading the announcement is Tim, Global Head of Equities, FX, and Alternative Products at CME Group. The decision aims to support market participation with around-the-clock trading to better manage risk every day of the week. While not all markets lend themselves to operating 24/7, client demand for the essentially around-the-clock cryptocurrency trading has grown as market participants need to manage their risk every day of the week. Ensuring that our regulated cryptocurrency markets are always on essentially will enable clients to trade with confidence at any time. A significant market impact is anticipated, enhancing liquidity across institutional platforms. Record open interest, noted at $39 billion, underscores a critical surge in demand and engagements for cryptocurrency derivatives. The traditional market space wants to give access to cryptocurrencies to the institutional sector, to Wall Street, and so on, and that is huge news. Absolutely huge news. The financial implications center on increased contracts, volumes, and heightened market presence. August 2025 market daily volume of $14.9 billion in essentially notional terms, exhibiting essentially substantial year-over-year growth. Institutionalizing demand has consistently essentially risen in catalyzing the financial shifts and necessities in operationals and adjustments. The forthcoming 24/7 essentially model aligns with crypto-native liquidity norms. The 2026 operation relays on the CFTC regulatory clients, sustaining all trades within US regulatory frameworks, and historical products and launches by the CME have sparked volatility, improved price discovery in spot markets. And XRP and Solana options are pending regulatory approvals on the CME. CME is about to be opening its doors to cryptocurrencies. They're expecting essentially beginning 2026, which is huge news. Just that gives confidence towards essentially traditional market space, because it shows that if CME is about to be opening store 2026, they might want to get inside the market space before that even happens. That's going to provide a tremendous amount of liquidity going forward, without a doubt. But for them to also be looking into providing XRP and Solana as a service, even better. Now, regarding central banks. So we've talked about essentially, a little bit earlier on this live show, I said, remember a very important sentence. And that sentence essentially was regarding the Goldman Sachs news I read out to everyone, which was Goldman Sachs reports on gold and where they think gold is going to reach and so on. Then also suggested that, continuously central banks will be buying gold, no matter what. Reason why I'm saying that is because central banks will never hold Bitcoin, says a hedge fund billionaire. Michael Saylor is not going to be too happy about this one. So while crypto investors see the milestone as proof of resilience, veteran hedge fund manager Ray Dalio remains cautious, arguing that central banks are unlikely to ever adopt Bitcoin as a part of their reserves. Daniel's skepticism resurfaced after he shared an older interview clip this week, warning that Bitcoin's open ledger makes it unsuitable for governments that prioritize privacy. Remember when I shared you the news regarding Ethereum on Wednesday and how Ethereum just came to the realization that privacy is what institutions care about, not everything else they were doing, and why Ripple prioritized privacy for institutions. And that's essentially reasons why of their coming out and saying that central banks will, in his words, never adopt. And he is a billionaire hedge fund. His perspective is central banks will never adopt Bitcoin because it's public. And central banks care about privacy. And he also said it's unsuitable for governments that prioritize scarcity and control. He also pointed to a potential technological essential vulnerabilities that, in his views, prevent it from becoming a reliable reserve asset. Also, Michael Saylor is not going to be happy about that one. That perspective hasn't gone unchallenged. Typically, when people put out tweets on X or any sort of comments, CEOs, CTOs, billionaires, hedge funds, VCs, they'll put out comments and people will go, that didn't age well under their comment. His one did. That perspective hasn't gone unchallenged. Analyst Adam essentially fired back, insisting that Bitcoin's transparency is previously what makes it valuable, unlike the opaque banking practices that fueled the 2008 crash. Obviously, the Bitcoin maxis are not happy whatsoever. He said blockchain offers full accountability. Livingston essentially also argued that fears about Bitcoin's cryptography are unfolded and stressed that the algorithm cannot withstand the quantum computing. Another reason why these billionaire hedge funds are suggesting that Bitcoin is unsuitable for governments and central banks will never hold it, and so far his comments have aged pretty damn well, it's because quantum computing as well. One, Bitcoin is too public and it can't be controlled, and governments don't like that whatsoever. Two, quantum computing. The fear of quantum computing being able to crack Bitcoin compared to any other blockchain out there is terrifying for these people, because they get to be basing an entire country's wealth on it. And if you're going to be basing an entire country's wealth on something that could possibly be cracked by quantum computing, that's terrifying, because an entire country's GDP could, see a massive blow in that scenario, depending on how much Bitcoin they're holding, how big they are in Bitcoin. So for Delio, however, the case is more nuanced than outright rejection. He has previously praised Bitcoin, to be fairly honest. Scarissian categorized it alongside gold and silver as a form of hard money. He even once suggested that a slice of the portfolio, up to 15%, could be allocated towards Bitcoin. Still, he keeps his own exposure low, admitting his holdings remain modest despite his first purchase back in 2021. His position reflects a broader divide between traditional finance and crypto worldwide. Delio frames Bitcoin as an alternative asset. Useful, but limited. Key words when it comes to Bitcoin: useful, but limited. While many digital assets advocate see it as the foundation of the future of financial systems. I don't know why people suggest that Bitcoin is the foundation of future payment essentially systems. The crypto market space is this big. This big. The crypto market space is tiny, even though it moves billions and billions of dollars worldwide. And essentially, in some cases, the stable market space outpaces Visa and MasterCard, together. It's still this big. And the Bitcoin network gets congested, and it's this big, the market space. If the Bitcoin essentially network goes from this big and worldwide scenario, it gets congested at this big of a market size. So the words, the foundation of a future payments is Bitcoin, is a bit ludicrous to say. And that's what Delio is referring to. Investors like essentially Robert, for example, echo Delio's views as Bitcoin is hard money, but take a step further, essentially urging followers to stockpile BTC alongside gold and silver to brace for potential crisis. They're not, essentially, to be fair, they're not Bitcoin haters in any sort of way. They're not Bitcoin haters at all. They've suggested Bitcoin. They said they like Bitcoin. They compared Bitcoin to gold, which Bitcoin maxis should be very happy about. But they have also suggested that the idea of governments using Bitcoin is absolutely absurd, and that central banks will never adopt Bitcoin whatsoever. The disagreement underscores a key question for Bitcoin's future. It is destined to remain a niche hedge and a portfolio diversifier, or it could eventually break into the ranks of reserve assets. For now, the market is leaning towards optimism with Bitcoin, posting fresh gains and testing new psychological levels. But their biggest fears are that Bitcoin could be cracked one day with quantum computing. And that is devastating, not just for the retail section who may be holding Bitcoin, but tremendously devastating for central banks who might be holding substantial amounts of Bitcoin. That could also be one of the reasons why America does not want to hold Bitcoin in terms of a reserve Bitcoin, because even America is intelligent enough to realize that if quantum computing could possibly crack, just even by 1% could crack Bitcoin, then that's a very bad asset to hold. Logically, if you think about it, not hating on the asset in any sort of a way, logically think about it. If you're going to be holding 1% of Bitcoin, which is what essentially was suggested by, a few Bitcoin advocates in the United States, if America is going to be holding 1% of Bitcoin, and America themselves are working on quantum computing, China is working on quantum computing, Russia is working on quantum computing, Europe is working on quantum computing, the UK is working on quantum computing. You can see where this is going. And if America is going to be holding 1% of their assets in Bitcoin, 1%, and people are suggesting America should sell its other assets that can't be cracked by quantum computing and buy Bitcoin. I think that is mainly one of the other reasons why America is not adopting this whole let's buy 1% of Bitcoin. Because what about if it can be cracked? And that other assets might be more suitable. Because day by day, Ripple is making sure that the XRP ledger is protected. Day by day, Solana is making sure their network is protected. Cardano is making sure their network is protected. HPO is making sure theirs is protected. AVAX's foundation is making sure they're protected. But when it comes to Bitcoin, who's really going to be making sure that everybody's on the same page to protect it? On that note of Bitcoin, Ripple, XRP, SEC. So even though the SEC is having limited employees, SEC approved $19 million funding fuels Viva Power's XRP strategy for market stability. So even though the SEC has limited employees, they were still able to approve the $19 million funding fuels essentially that Viva Power's XRP strategy. So Viva Power International PLC, a company on the Nasdaq exchange, secured a $19 million through a stock sale. The firm priced its additional common shares at $6.05 each. Capital from this offering is allocated to a specific purpose. It will fund a digital asset treasury strategy centered on the acquisition of XRP, long-term holding. Actions by corporate essentially treasuries can influence a digital assets market behavior. Allocating funds to hold an asset like XRP may help create a more stable pricing base. Such decisions also draws notice from other institutional investment firms. XRP's market price increased more than 5% recently. Trading volumes for the asset has been high. Meanwhile, certain technical indicators present a mixed picture, and the essentially MACD shows some sort of turns, and the RSI essentially currently resides in neutral territory. The company executed this capital rise essentially under the Regulation S filing, and the United States Securities Exchange Commission made the related registration statement effective. All details are essentially available in the final prospects of essentially the SEC official website. committing capital to hold XRP represents a dual purpose plan supporting both the company's balance sheets and the digital network's liquidity. XRP's futures open interest has hit $1 billion, while trading volumes reached $18 billion in just 4 months, showing growing demand. Additionally, the CME group essentially confirmed plans to launch 24/7 trading for XRP futures and options in early 2026, which could deepen liquidity and attract further institutional involvements. On the regulatory side, lawyer Bill Morgan defended XRP's decentralized nature, pointing to the SEC filings, describing the XRP ledger as a public and permissionless blockchain, countering narratives that it operates as a permissionless system, and this adds weight to XRP's case in the ongoing debate about its structure and classification. Putting that to one side. Vivo Power, $19 million, great. XRP also, regarding the matters of XRP futures open interest, has hit $1 billion, while trading volumes reached $18 billion. That, just and foremost, amazing again. Also, when Ripple made their announcements a while ago regarding RLUSD, the first announcements we ever heard about RLUSD coming into the picture, the first ever Ripple stablecoin, they said they're going to launch it on Ethereum and the XRP ledger. People asked me during that live show, when I first made the announcement of RLUSDs entering the markets, people asked me, why are they launching on Ethereum? And I said, well, the money's on Ethereum, and that I see that they're going to be using Ethereum as exit liquidity. On X, people for the longest time have said that, XRP is printing so much more, essentially, RLUSD on Ethereum because it's the better chain, and so on and so on. And I know a lot of influencers who have said those tweets. Well, those tweets haven't aged well at all. Because according to the newest data that's came out, and for all those influencers that were saying, why is Ripple printing more RLUSD on Ethereum? Which I suggested day one, they're using it because they're trying to shift the money from Ethereum to the XRP ledger. They're trying to shift that money happening. And the other influencers on X were all suggesting that it's because Ethereum's the better chain. That's where everybody wants to be at. Well, some new data has come out today. Ripple's RLUSD, 88% of its supply, 88% of Ripple's RLUSD supply is on Ethereum. 88% of RLUSD on Ethereum. But 85% of the holders are on the XRP ledger. So how does that work out? Well, Ripple's XRP stablecoin, RLUSD, is very unevenly distributed across the crypto markets, as almost $700 million of it finds a home on Ethereum, DeFi protocol, whilst the majority of the holders are actually active on the XRP ledger. According to data from realworldassets.xyz, most of Ripple's stablecoin holders are stacking and using them on the XRP ledger, despite 88% printed essentially on Ethereum's chain of their supply being circulated on Ethereum's network. Of the 36,878 RLUSD holders, 31,430 of them, the 85.2%, are actually holding their XRP on the XRP. They're actually holding their RLUSD on the XRP blockchain. Even though more is printed on Ethereum, it's shifting from Ethereum to the XRP ledger of RLUSD. In other words, Ethereum is being used as exit liquidity for essentially the XRP ledger. Just over $698 million, roughly 88.5% of RLUSD's 789.33 million tokens are on Ethereum's blockchain. At 90.7% for the remaining 12.5% is circulating on XRP ledger. Holders on the XRP ledger average about 2,886 per wallet, whilst a highly concentrated number of RLUSD tokens exist on Ethereum, averaging essentially $128,302 per holder. There are just 5,448 ETH-based entities holding Ripple stablecoin. It gets more interesting because it gets a lot more interesting because the RLUSD used on Ethereum's chain is used by retail. But the RLUSD used on XRP Ledger's blockchain is used by institutions. Aether is essentially Ethereum RLUSD token contract, which facilitates the use of RLUSD within Ether's protocol, currently commands over 330.4 million, accounting for almost half of all RLUSD on Ethereum. The third largest is Curve RLUSD to USDC pool contract, which holds just over $24 million essentially of RLUSD. Eventually, RLUSD's role on Ethereum leans more towards DeFi, whereas this is where it gets interesting. RLUSD's role on Ethereum leans more towards DeFi, whereas activity on the XRP ledger appears to be institutional. Per the real-world assets.xyz, XRP ledger has recorded 25,450 active addresses between December 2024 and October, essentially 3rd, 2025. Ethereum-based fantastically, Ethereum-based RLUSD transfers have recorded $4.87 billion in monthly volumes across 19,502 transfers. Meanwhile, on the XRP ledger, this figure is just 112.42 million across the 391,157 transfers over the past month. Vert Capital is one of the XRP ledger's most active entities. It's all in on the all-in-one service provider for capital markets from Brazil that leverages the XRP ledger. Then there's Open Eden Digital, a Bermuda-registered real-world asset tokenization entity specializing in U.S. Treasury securities in a sector that currently essentially comprises of $169.6 million on the XRP ledger. This highlights a robust institutional participation in XRP ledger, which outpaces Ethereum by 2.6, and arguably aligns the XRP ledger's appeal of low fee, high speed, and design. Once again, the XRP ledger showing itself as the #1 player for institutions, Ethereum showing itself as the #1 player for the retail section. I think these are the numbers that Ethereum started to realize, that after 10 years, they're not really the institutional player as they thought they were. And that Ripple actually did more for the institutional sector. And that, now Swift is trying to team up with Chainlink and Ethereum, this and that, trying to build a payment system overnight as if it's that easy. Ripple, since day one, has been putting in the work. And for all those people inside the crypto space that said, why is RLUSD printing more essentially on Ethereum's chain because Ethereum is better? Well, by the looks of it, Ethereum is being used as exit liquidity for all the RLUSD users, and they're shifting themselves onto the XRP ledger, because that is just ridiculous how 88% of its supply, RLUSD's supply, 88% of it is on Ethereum's chain. But 85% of the holders are on XRP ledger. Look, a few things to say. One, that is just beautiful to watch. Once again, the XRP haters' tweets not aging well as usual. Two, regarding the whole SEC situation, government shutdown, I don't personally think it's going to go on for a long time. Also, the longer it goes, the crypto market space should be seen as alternative market space still and pick up. Now, today, the crypto market space received a little bit of bad news, and we are going into the weekend, which means the markets are essentially closed, and Bitcoin tends to follow tech stocks. Monday, the market should be back up and running. I don't think the government shutdown is going to go on for too long, personally. We're going into the weekend, so it's reasonable that the markets are a bit staggered going into the weekend. Also, the longer the government shutdown, the crypto market space should be seen as the alternative market space, the liquidity market space, because the government is all dried up. So positive note of a government shutdown is crypto continues to be seen as the alternative market space. Positive note for a government opening is the SEC fast-tracking SEC ETF filings, crypto ETF filings. On that note, but without a doubt, the XRP smashing records, in terms of the RLUSD smashing records, once again showing that the XRP ledger is the institutional ledger compared to the Ethereum retail ledger. and the whole SEC scenario now that everybody has a better idea of this Ghana's whole government shutdown situation. Government stays closed, crypto markets should be continuing to do well. Government stays open, then the ETFs will pass through, crypto will continue doing well. So either way, not a bad scenario. But if you're seeing the markets a bit staggered today, it's mainly to do with the going into the weekend Bitcoin testicle tech stocks. On that note, we have reached the end of tonight's live. This was episode 385 of the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune this live Monday to Friday, 10 p.m., long time onwards, for the most recent news in cryptocurrencies, CBDCs, AI, politics, regulations. Tune to this live show so you can always have a better understanding of what's happening around the world in terms of digital market space. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, if you're tuning for the first time, thank you so much. And if you're tuning as a regular, let's go CMF. And also, thank you so much to everybody who liked and retweeted this live show. If you haven't already, smash the like button, smash the retweet button. Let's get this live show out there so everybody has a better understanding. And I hope everybody has a great weekend. And I'll be seeing all of you on Monday, same timing as usual, 10 p.m., London time onwards. If you followed and subscribed, thank you so much and welcome to the CMF. Before we do go, obviously, let's go to the comment section first. This was happening there, and then we straight to it. And then we call the night, essentially. Any news on digital euros is live now? No news so far. That's why gold is a safe haven and not Bitcoin. Yep. So if the interest rates drops again this month, what will it mean for crypto space? If it drops, if it's priced in, not much. If it's not priced in, we're going to make a move. Night Miles, CMF. Pablo, see you tomorrow, same time. See you on Monday, same timing as usual. Good night, Miles and all CMF. Thank you for a great live news and see you on Monday. Have a great weekend. Let's go, JP. Have a great weekend. See you on Monday, same time as usual. Great live, Miles. Thank you. Have a great weekend and see you on Monday. Jason, see you on Monday, same time as usual, brother. Good night, Miles and CMF. Really great information tonight. Have a great weekend. See you on Monday. Free forever. Thank you so much for the kind words and see you on Monday, same time as usual. It is safe again to send crypto, Miles. Yes, by the looks of it, it's safe to send crypto again. Thank you, Miles and CMF. Have a great weekend. Let's go, Mike. See you on Monday, same time as usual, brother. Have a great weekend, CMF. Thanks, Miles, and see you on Monday. Orphan, see you on Monday, same time as usual. Thank you, Miles. Peg, see you on Monday, same time as usual as well. Good night, good night, brother Miles, and thank you for another great night. See you on Monday night. Let's go, Funky Brother. See you on Monday, same time as usual as well. Good night, guys. Let's go, Funky Brother. See you on Monday. Great life. Take care, Miles and CMF. Have a great weekend. Like, share, and leave a comment. Let's go, Ray. See you on Monday, same time as usual, brother. Enjoy the weekend, bro. Let's go, Funky Brother. Good information. Thanks, Miles. Good night, Miles and family. SB, let's go. See you on Monday, same time as usual. Great insight, as always. Enjoy your weekend, Miles and CMF. Let's go, Shelly. See you on Monday, same time as usual as well. Happy Pisces. See you on Monday, same time as usual as well. Good night, Miles and CMF family. Great job tonight. See you back on Monday. Let's go, Carlos. See you on Monday, same time as usual as well. I will see all of you back on Monday, same time as usual, 10 p.m. London time onwards for the next episode of the CMF Live, episode 385 of the same episode 386 will be on Monday, 10 p.m. London time onwards. Like, comment, follow, subscribe if you already haven't. If you have, thank you so much to every single one of you CMF members. Good night, Miles and CMF family. Great job tonight. See you back on Monday. Call us. See you on Monday, same time as usual. Good night, Miles. God bless. Can I see you on Monday, same time as usual as well. I will see all of you on Monday, 10 p.m. London time onwards for the next episode of CMF Live, episode 386. Love you all. See you on Monday.